Debt is a good thing until it's not. Welcome to another episode of Back to Basics. It's approaching the end of February. Are we all still aligned on profit? Is this the main focus of 2025? 2 of our 12 months are almost complete. And while I know it's cold and dark and rough in some areas, we can't take our eye off the prize of profit in 2025. Now, you may have noticed there's a pattern to these videos I'm putting out. The first video was about just overall financial importance. Then we hit prepaids. Then we hit inventory. Last week we hit fixed assets. We're going down the balance sheet. We're starting at current assets, then moving into long-term assets, then moving into fixed assets, then moving today into liabilities. Yes, liabilities, what you owe. Some of you may know your liabilities as credit cards, leases, loans. Today, I want to focus on the loan portion, or otherwise known as debt. I know I'm very aware that most of you have debt on your books, and debt is a good thing until it's not. Debt is a positive, good thing when it's kept in check and when we understand what we're using the debt for and how we're getting a return on investment. But enough on the frou-frou strategy. Let's go break down debt at its core. Debt has two components. It has a principal component and an interest component. And we typically pay those off once in one bill. We have a loan, it comes in, we pay it as one amount, and there's a principal portion and an interest portion. So you may be asking, yo, Chris, how does debt on the balance sheet affect my profit on my income statement, my profit and loss? Well, only one of the two components affects the profit and loss, and that's the interest portion. Now, the interest portion is an expense. And the higher your interest payment each month, the less profit you keep at the end of each month. Likewise, the principal portion, when we pay that off, it just affects the balance sheet and reduces the principal amount of the loan. Super important distinction to have here, and make sure that we're reporting this correctly. I talked to a brewery owner last week, was like, hey, Chris, we have positive net income, but the cash is so low. Our cash remains low. What's going on? When I hear that, my first question always is, how much debt do you have? How much debt do you have? You could be running a highly profitable brewery, but the amount coming out for principal payments, the amount coming out for inventory is going to really affect your cash. So it's a very important principle to understand. Net income and cash, they relate to each other, but they're not in exact correlation because of things like debt, right? Today, what I've done is I've included an attachment, which is a really simple debt tracker. We use it for all of our clients. It allows us to put in the name of the loan. It allows us to put in the principal amount at the beginning of the year and really track the payments. So you can see how much principal and how much interest you're paying on a monthly basis, and then you can sum it at the end of the year. When using this tracker, it's critical that you don't lump in a bunch of long-term debt into one sheet. Please duplicate the master tab for every major loan you have and track them separately. It is so important when you're trying to figure out at the end of the year, well, how much interest did we actually pay? How much principal? What was our cash principal payments for the year? I know you're going to find it useful. And of course, if you have any questions, shoot them my way. I'll help you get through it. I'll see you next week.